Well guys, the news is finally out and Nikola is officially proposing the issuance of new shares in its 2022 meeting of stockholders. I guess this means the short sellers and skeptics were all correct and Nikola stock will now tank 20% due to this proposed capital raise that absolutely nobody expected. I mean, who would expect an early stage EV company to demand new capital to invest in its own growth and work towards capturing more of the massive total addressable market that lays ahead of it? And future share issuance is something that Nikola's management totally didn't talk about in their latest earnings call, so this means Nikola is surely an intimate fraud. But jokes aside, there's clearly a misunderstanding in the retail investor community about how the share structure of a company actually works and how such dilution is actually executed. So in this video, I'll be explaining exactly what Nikola's latest share authorization actually means, go over the newly disclosed executive compensation package, and at the end, I'll analyze Nikola's stock chart to get an idea of what's behind the stock's recent strength. But before we get into it guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So let's start off by addressing the big piece that came out on Nikola by CNBC earlier this week, which is essentially an article that goes over the annual meeting of stockholders that Nikola had recently announced through an SEC filing. Now, for those who don't know, this is a very common thing for public companies to do during the first and the second quarter of the year because these companies have to get their stockholders' approval before doing any changes to the company's share structure. And all of this is done through something called a proxy statement or a pre-14A SEC filing. And as you can see, recently Nikola announced their proxy statement in which they go over the compensation package for its executives, the future plans for the company's share structure, and background information on the company's leadership team and board of directors. As you guys can see, Nikola's chairman of the board is Stephen Gursky, who was formerly a part of General Motors, and he's essentially the one who orchestrated the IPO for this company through the special purpose acquisition in 2020. And since obviously we are coming up to the middle of the year, it's no surprise that Nikola is filing this proxy statement before the end of the first quarter. And as you can see, there are 5 main things that Nikola is proposing in this annual meeting of stockholders that retail investors like you and me can actually vote on June 1st. You will either get a physical mail in your mailbox or an email that goes over the process on how you can actually vote on the stockholder meeting. And as you can see, the primary thing that really caught the eye of Wall Street is the fact that Nikola is intending to increase its authorized share count from 600 million to 800 million. Whereas the rest of the stuff on here is very garden variety, which includes the election of 10 directors to serve until 2023 and the appointment of their independent registered public accounting firm. But before we move any further, we need to first understand what exactly authorized shares are. Now, for those that don't know, authorized shares are essentially the big pie of shares that the company has available for any investor that it wants to issue shares for. And underneath the umbrella of authorized shares, there are 2 forms of shares that are called the outstanding and the treasury shares that are also often called the float. And what Nikola here is proposing is an increase in their authorized share count, not their outstanding or their float. Authorized shares are not necessarily issued shares that are given out to investors, and that is where the actual dilution for stockholders takes place. When companies need to grow and perform a lot of capital expenditure, they need to increase their authorized share count so that down the road, they can issue new shares to investors who have the demand for the stock. By increasing the authorized share count, Nikola is essentially making the entire pie of shares bigger and allowing more investors to be a part of the company, which is obviously something that's going to happen when the company is growing at such a fast rate and executing on its business model. For example, Nikola's outstanding share count right now is around 413 million, whereas their authorized share count is around 600 million. And underneath that outstanding share count umbrella, there is something called the free float, which are the shares that are actually trading on the stock exchange. And the difference between this number and the free float is essentially called the restricted share count. And those are the shares that are owned by insiders and institutional investors like Tunim Stone Capital. But what a higher authorized share count would allow Nikola to do is to increase its total shares outstanding down the road by allowing more investors to be a part of the company. As a matter of fact, a company like Tesla's current authorized share count is around 2.1 billion shares. Meanwhile, their outstanding share count is sitting around 1.12 billion. So if you do the math, that means that the authorized share count of the company is around 86% higher than the actual outstanding issued share count. Whereas for Nikola, the difference is more around 43%. And so if you want to compare to the industry benchmark in the form of Tesla, Nikola's new 200 million share authorization brings it right in line with the percentage of Tesla's current ratio. And obviously, even if this new share authorization is approved by stockholders in June, it's not going to result in immediate dilution of the company's outstanding share count until Nikola can find investors to buy its stock. And as you can see, for actual dilution to happen, you need to file an S1 form in the form of this, which is where you can see the outstanding share count goes up from around 413 million to 430 million. And this is if this offering actually takes place through Tunum Stone Capital, meaning Tunum goes ahead and buys all of these 17 million shares from Nikola. And if we have a look at Tesla's outstanding share count ever since it went IPO, as you can see, this company has significantly diluted its shareholders if you look at a 10-year perspective. But it's not a bad thing because a company that's growing at the rate of Tesla needs new capital. And as the demand for its stock continues to go up, the company has more flexibility in how it can issue stock. As you can see, Tesla went public with around 37 million shares outstanding, and then on the IPO, it had around 460. And then every single quarter over the past couple of years, Tesla's outstanding share count has grown from around 400 million all the way to now at around 1.1 billion. Whereas for Nikola, it's a very similar story. On the day of the IPO, the company had around 270 million shares outstanding, and when the public offering actually happened, the company's share count went to around 350 million. And now obviously, since over the past few quarters, the company has redeemed warrants and issued new shares to investors like Tunum Stone Capital and Iveco, the company's total outstanding share count is now at around 400 million. And so this slow and consistent increase in outstanding share count is very characteristic of growth companies and should not be that surprising to investors. Getting back to the proxy statement, as you can see on top of the new share issuance, there's also a section dedicated to talking about the company's board of directors and leadership. In this section, they basically talk about the biographical information of the board of directors and how these people are actually elected to the company. But for me, the most informative and exciting part is this executive compensation section, which is where they talk about the restricted stock units, stock options, and percent ownership of every single corporate executive at Nikola. And this is where things get really interesting. As you can see, for 2021, the CEO of Nikola, Mark Russell, only took in a $1 annual salary, and his main compensation is coming in the form of stock. Now on the surface, this sounds very gimmicky, but if you do the research and understand why this is the case, this is a very smart move from Nikola's executive team. Because what we want to see as shareholders for such an early stage company is the compensation for the company's executives coming not in the form of a consistent six-figure salary, but in the form of actual stock appreciation. Because if the stockholders and the executives' interests are not aligned, then there is very little confidence that will be given to retail investors investing in Nikola. And as you can see, the performance awards are based on RSUs on a 3-year performance period where Nikola's stock has to actually go above a certain price point before Nikola's executives can sell their shares. This process is called vesting, and in this case, Nikola has set its vesting targets at around $25 a share, $40 and $55 a share. And like I said, since the business combination price for Nikola was at $10 a share, these executives are not going to get paid if the stock price is anything underneath that price. And as you can see, although in 2020 and 2019, Mark Russell and Kim Brady got a six-figure salary, now they're only taking a $1 salary and getting most of their compensation in the form of stock awards, RSUs, and stock options. And that is exactly what you want to see from a growth company instead of cash bonuses. And if we have a look at the security ownership of every single executive at Nikola, Kim Brady owns around 2% of the company, whereas Mark Russell has around 11.7%, which is a very significant stake for somebody who is not the founder of the company. And that means that Mark Russell has a lot of skin in the game, and since he has not sold any major portion of his stock holdings over the past year or so, there is a very big incentive for him to perform well and make sure that stockholders are rewarded. And for those asking what exactly Nikola needs to raise money for, as you can see, the main thing is going to be their phase 2 expansion of the Coolidge, Arizona facility. And obviously the over 1,300 pre-orders, letter of intents, and MOUs signed for Nikola's Tre battery and fuel cell electric are not going to fulfill themselves, and Nikola's going to have to invest quite a lot in their production capacity right now. And if we now move on over to the Nikola stock chart, as you can see, it's very clear that institutional investors and hedge funds actually understand how share issuance works. And for the first time since December, we have officially closed above this 50-day moving average. And like I said last month, Nikola stock is very closely following the Russell 2000 index, which is a small cap index of any company underneath a $5 billion market cap. And as you can see, this index has been in a bear market since November, and that is exactly when Nikola stock also peaked for the last 6 months. And so it's absolutely no surprise that Nikola stock is down from its highs of around 12 bucks because the entire market itself is in a bear market right now. And if this is the bottom for the small cap market and the S&P 500, then we're going to see a lot of share price appreciation on Nikola stock in the short term, barring any geopolitical or commodity related shocks. And as you can see, a big reason for that correlation between the Russell 2000 and Nikola stock is because of the fact that hedge funds and institutions have been increasing their stake in the company. And that leaves the total institutional ownership for the company at around 26%, which is a very healthy number and definitely leaves a lot of room to the upside over the next year or so as the company executes on its production plans. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below your thoughts on Nikola's latest share authorization, and I'll catch you guys in the next one. Take care.